The purpose of this video is for you to decide if you think that a global recession is as bad as it's going to get, or if it's going to be something more significant, something that takes longer, a global depression. I went around the world. I looked at Russia, India, China, Australia, a whole bunch of places, the European Union. And I'm telling you a few things I found in my analysis that I think are really significant. And I think if I give you a lot of this information, you'll be able to make your own decision of what you think is going to happen next with the economy. I'm leaning towards deflation in the United States. I'm leaning towards a global depression. But that's me. I'm wrong plenty of the time, and I always see things from the more cautious side of things. If we get out of all this without a global depression, that'll be great and no harm done. So prepare for the worst, but let's take a look at what I found in some of these countries, what's going on right now in terms of how the countries are growing, how they're interacting with each other, what's next for their economies. And when you add up all these different countries, you get a really clear picture of what is happening with the entire world right now. No matter what it turns out to be, we know that it's going to be global. It's already global. There's a recession in Europe right now. There's a recession in the United States, and they'll muddy the waters and debate about the actual wording of it and say it's not a recession, even though it's what we told you a recession was. Federal Reserve does that. Let them have it. It's a matter of time until it gets bad enough that they can no longer say that we're not in a recession. They can mince words right now, but eventually they'll go, okay, it's obvious, everyone, we're in a recession. At least. Maybe it gets worse to a depression level kind of thing. Multiple years, significant downturn, major negative effects on the overall economy. And in all of this, all of my analysis journeys, one of the things I found is a really great bright spot in the world economy. A country that is really getting its legs underneath it now. It's really growing faster than any other developed nation. This is a country that if you get involved with now will be possibly something that gives you a lot of opportunities to build wealth, preserve wealth, and better your situation. We'll get to that country just in a minute in this video. You know the global economy is more connected now than ever before, by far. And so when the economy does well and it starts doing better, all of the economy kind of moves together, not perfectly connected, but things get better together, things get worse together. That's what we're seeing in America right now. Everything's coming down together, like I told you, well ahead of time. This is what's going on in the world. Everything either is getting better or worse. So I took a look around the world. Here's what I found. Here's all the information you need to make your own decision about what happens next. And then prepare yourself to capture a lot of the opportunities and advantages that are going to come from knowing this information ahead of time. So let's get into it. This video is about you getting the information you need to make an educated decision about whether or not we're going to be going into a global depression or a global recession. My name is Peter Leeds, and this channel is about understanding, surviving, and thriving in this economic clown show that is being foisted upon you. Nothing in this video is personalized trading advice. For more ongoing help from my team and I, please just simply subscribe to the channel, one click, or swing by peterleeds.com. Europe had a big energy price inflation shock. And the government does what the government does. They overreacted to it with a bunch of artificial influences. They put caps on spending or price controls. They gave out money to people. It's all artificial. Artificial things are temporary. So as long as the government has a political will to keep giving money to people to help offset the problems with the energy supplies, then things will be better until it gets worse when the government's artificial influences turn out to not work. Europe is in recession right now, and despite that fact, the European Central Bank is still going to raise interest rates coming up. So you've got one of the world's biggest economies in recession right now, and they're going to make it worse. They're going to punish the economy of Europe even more. There's two different things here. There's European Union and there's the United Kingdom. I'm talking about Europe. And this is all under the umbrella of a horrible, clunky, discombobulated clown show that is Brexit. That's still going on. And it's heating up. They're having to do the whole Brexit thing, and it's just a clown show. It's a mess. No one knows what's going on. That's not a way for an economy to roll along and hum along really well and build and grow. And I will be talking about the United States too. And just before we get there, let's talk about one more place in Europe that I want to call out here. This is Italy. It's looking like they're going to have their first woman leader, Giorgia Meloni, and she's the first far-right, possibly fascist candidate since Mussolini.
With around 24% of the vote, polls say Meloni will lead the biggest party and as a result of this week's deal, will be Prime Minister. Cue panic in Europe and beyond. The brothers are rooted in post-war fascist politics. They're certainly populist and nationalist and sceptical of Brussels. Meloni has been compared with Hungary's Viktor Orban.
She says she's not a fascist. The media says she's a fascist. That means she's much more likely to be a fascist. They're not accusing me of being a fascist. They're not accusing you of being a fascist because there's no possible connection there. But the fact that she's denying it, that alone says something about whether or not she's a fascist. But the point isn't fascism. The point isn't Italy going the wrong way. I'm trying to show you that. And Italy is one example of what's going on in many countries in Europe right now. There's a movement to the hyper-conservative, far-right, anti-immigration policies, not just in Italy. Many other countries in Europe right now as well. Italy is the one that looks like possibly the first fascist leader since Mussolini. And just to take it a little bit darker for a minute, World War II started after a global depression. And if history is going to rhyme, then perhaps maybe we have World War III after we have a global depression. But enough of this heavy talk. We'll lighten up the mood. Let's talk about America. A little bit closer to home here. Retailers did a horrible job of managing their inventories with the whole virus stuff that happened recently. They got caught on the wrong side of things and they overcorrected. What's happened is a lot of retailers and even manufacturers have just loaded up on supplies, commodities, products, everything. They've got so much inventory. They had all these supply chain fears. They had been on the wrong side of things right before that. They overreacted, they overcorrected. And that's why you are going to be able to buy things like an automobile for a lot less. A lot of things like automobile manufacturers had huge profit margins in the times where there's the chip shortages and the virus and the lockdown and everything's going on with that. And now those demands of too much money chasing too few goods in terms of automobiles is decreasing dramatically. The unnatural profit margins of the automobile manufacturers will be coming down dramatically. That's going to put pressure on stocks like General Motors, etc. You're also going to be able to buy all sorts of retail items at a big discount because they're trying to get rid of some of this inventory. And I'll get into this, how they're lowering prices to deal with this inventory glut coming up. You'll remember a while back I talked about the inventory glut, and now it's all playing out. But now we're just in a situation of way too much money in America, chasing way too few goods. It's temporary, we'll eventually work through it, but right now, next year or two conceivably, we will be still in the same situation that is slowly getting a little bit better. We're slowly working through the supply chain constraints and disruptions. We are having inflation here and a few other places in the world I'll get to too, that it's coming down right now. This isn't going to be coming down forever. And when we do get the big bout of inflation here in America, it's not going to be from overseas. It's going to be homegrown. What I mean by that is that I always talk about how inflation is going to come back to our shores. Nations are going to release US dollars or buy fewer US dollars. They'll have so much US dollars out there. It's been pumped out to the world. Everyone's got a lot of it. And as they release that, eventually it'll find its way back to American shores. Say, for example, some of that money goes to buy American goods, goes to another country for another currency that then they buy American goods. There's a lot of ways in which money overseas will eventually absorb back to America. But that is well down the road. Right now, if we have inflation, or whatever inflation we have, even though it is coming down a little bit, wholesale prices were down 1% last read, so they're declining a little bit. It's not runaway inflation. For sure, you can say it's not runaway inflation if it's not even increasing. So it won't be imported inflation when they release dollars in the wild and it comes back to roost. It'll be inflation here in America just because people have too much money here and too few goods and they're all chasing the same stuff. They're all paying more for a limited number of items. That'll be an inflationary pressure until those supply chains work themselves out a little bit better than they are right now. And one of the things I told you was going to lead to, well ahead of time, if you remember back, I was talking about disinflation. We've had that now. Disinflation is a decrease in the accelerating speed of inflation. So when inflation goes up 8%, and the next month it goes up 1 more percent, that alone, that right there is disinflation. The speed inflation is increasing is slowing down. And now we've already gone past the whole disinflationary phase, and now we're in the deflationary or the negative inflationary phase. Now listen to this about how well the American economy is doing. This is a great indicator. Jefferies analyst Philip Ng downgraded both International Paper Company and Packaging Corporation of America to sell after he's realized that there's a significant supply and demand disconnect. Given a massive inventory glut in containerboard, the company expects price cuts are due to come in the immediate future. Additionally, a hold rating on West Rock was reiterated due to similar concerns. What are these companies we're talking about that are all getting downgraded? They're companies that do cardboard, corrugated cardboard. They make boxes, they make things to ship goods. So it's a reflection of the activity of the economy. Just like velocity of money, you can see with container boards, how much business are they having? Do they have a glut? Is there a decrease in the demands on container board products? Is there less things being sold? To some degree, there's less things being sold because there aren't as many things to sell. It's a competition for items now. In America, I'm talking about. But the computer chips that are used in automobiles are making a little bit of a comeback. But supply chains, are they getting better? Let me give you a quote from an article I found that'll really demonstrate to you what's really going on. A recent survey from the Food Industry Association found that 70% of retailers said supply chain disruptions are negatively impacting their business. 70. Up from 42% the year before. The survey was conducted in the second quarter of 2022 and polled food retailers and wholesale companies representing over 38,000 stores. So you've got 38,000 retailers saying that supply chains are hurting their business, almost 85% more people saying that than a year earlier. In other words, the fact that if you look at someone's business being hurt by supply chain disruptions, that number is growing significantly right now. But at the same time, there has been a global economic slowdown worldwide, which is what global means, so ignore that part. Sorry. So to a certain degree, a lot of these retailers might be blaming the wrong thing. They're not realizing that it's a recession, and they're saying, well, business isn't doing well. Maybe that's supply chains. It's kind of like the media. Whenever you see a headline, no matter what happens in the stock market, then they point to inflation, recession. They point to like whatever's in the news, and they say that's why the market did what it did. But is it? The market just does whatever it's doing, and then they talk about it after the fact. Wow, stocks are down. Inflation's really hurting people's pocketbooks. Like, that's not a real thing. It just sounds good. I'm not saying inflation's not real. I'm not saying people's pocketbooks aren't getting hit. I'm saying no matter what happens to the stock market or even the economy, the headlines come out talking about and pointing to whatever's in the news at the time. North Korea, that's the big thing right now. North Korea, that's what they do. And then they say that's why the markets are down. And it's not why the markets are down. Sometimes markets just go down. Increases in consumer demand, labor shortages, and trucking and shipping capacity restraints continue to interrupt supply chains. And I realized that I'd better give you some good news right now before you guys start hanging up on me here. You, in America, are going to be able to buy a car, an automobile, for a lot less than now or a few months ago. Just wait. This is from a publication called Driving. Just as we are entering a recession, auto dealers will have their lots full of vehicles to sell. Inevitably, automakers will once again flood showroom floors, dealers will again become desperate to move metal, and hefty markdowns will be required for cars that nobody wants. And not only is this going to affect you, It's bad for the economy, but it's going to affect you because you can pay less money for a better car. But the corporations that make cars are going to take a big hit as this all plays out. Auto companies have great financial results. Now that is going to go away. This will also pull lower on inflation. That's huge, but let's spread it out a bit more to the even greater economy. We'll talk about Walmart and Target. You can look at things like corrugated cardboard, Walmart, Target, FedEx to get an idea of how the economy is operating. What kind of strength are we looking at? Retailers Walmart and Target will see lower profits, drop prices to clear their inventory glut, and that is also going to pull inflation lower. Now, this is from Investor Business Daily. Both discount giants, that's talking about Walmart and Target, reaffirmed guidance for the second half of the year after slashing guidance earlier. So what does that tell you? Walmart and Target slashed their guidance. Some time goes by, they check in and say, hey, Walmart and Target, do you guys really mean to slash your guidance that badly, that significantly? They say, yep, we're not changing it. That's slash guidance. We're sticking with it. So there's a lot less activity demonstrated in sales from Target and Walmart. And then that eventually bleeds over to the stock market, to the economy. It's an indicator of what's going on with the economy. Things are slowing down in America, worldwide as well. It's a question of how bad does it get? Where does it go? Most people don't like to hear what I say because it's hard to think about and it's going to suck. But a lot of times, people overlook the worst case scenario. It's a mental thing. You turn it off. You flick a switch. You ignore things you don't want to hear. I'm just telling you what I'm seeing. I'm wrong plenty of the time. I'm right most of the time. It works out pretty well for me. I hope that if you see things in terms of some of the stuff that I saw, that you'll be able to know what's going to happen next and make the moves you can make and live with those moves and decide, say, I actually looked into a bit. I got some great information from Peter Leeds. Maybe I looked into a few other things. And then you decide, here's what's going to happen. And so therefore, here's what I'm going to do to have the best outcome from what is about to happen. It's going to happen either way. If there's going to be a depression, there'll be a depression either way. You might as well be able to help the people you care about. At very least, learn enough to help the people you care about. And I'll show you a couple of charts here. Here's a Walmart chart. And you can see where it dropped off significantly. That's when they released some financial results. And the same thing with Target. What does that tell you about the economy? And the other one I like to look at is FedEx. This is from Yahoo Finance. FedEx gave investors a stark announcement on how business conditions continue to weaken on Thursday, withdrawing its full-year guidance, while CEO Raj Subramaniam warned the global volumes significantly worsened and are likely to decline even further. That's the FedEx CEO. And when he said that, Wall Street stocks reacted really harshly. The stock fell more than 21% following the pre-earnings announcement, and shares of FedEx are down 37% year to date. But here's my favorite quote paragraph of everything I saw of this entire video. My favorite paragraph. Let me read you this. And I don't mean to be happy about it. I just think it's hilarious. It's not a good thing. So I'm sorry the economy sucks, but listen to this paragraph that I pulled out, and I said, this is my favorite paragraph. This is from some analysts at Deutsche Bank, and they wrote a note to their clients. And what they said, and I quote, FedEx pre-announced the weakest set of results we've seen relative to expectations in our 20 years of analyzing companies. Sometimes things are just self-evident. And I want to talk just while we're finishing up on America here, before we get into some of the really good stuff. We're talking about Russia, China, India. Stimulus bills. How much money was given out because of the virus? Talking about the G7 countries, which used to be G8 with Russia, but then they did the whole stupid thing. The G7 spent $8 trillion worldwide on stimulus payments. Of that, how much was in America? $5.5 trillion in stimulus payments, United States alone. And of all of that, $1 trillion was infused or given or pushed directly into the bank accounts of individuals. $1 trillion. So this is why I say the economy is so much weaker than we realize it. We're living off credit cards. We're getting money given to us. Things are slowing down. People are buying less. It's all playing out right now. Now I'm going to jump to a big one here. This is a country that is set up demographically and in the financial situation exactly as America is right now. But this was 40 years ago. I'm talking about Japan. They had 4 lost decades now. It used to be 1 lost decade. And then 2, 3, and 4, you get it. 4 lost decades, going on 40 years almost. But check out some of these stats. The Bank of Japan bought 70% of government debt. 70. And they're also the biggest shareholder of corporate Japan. So to me, this seems like it's not just that the Bank of Japan is the central bank of Japan, but it actually is Japan. But here's what happened. Do you remember the Plaza Accord? What that was basically is a select few, half dozen, I don't know how many there were, but there weren't a lot of them. Central bankers all deciding, well, the yen should be this and the dollar should be that, and just deciding what anything should be valued at and moving money or printing money and controlling it. That's what the Plaza Accord was. What happened after that? The yen started rising. And listen for what sounds familiar with America as I go through this, okay? 40 years ago, the yen started rising. Kind of like the US dollar, maybe? In response to all this artificial coordination and manipulation, just like we're seeing now, there's so much manipulation. What happened to free markets? I don't know. Free markets will solve everything. You don't need Federal Reserve. So what that meant was that if you're a Japanese citizen, you can buy imports for less money. Things got cheaper and cheaper and cheaper to buy for Japanese people. And at the same time, the economy of Japan, do you remember the world was going Japanese for a couple of songs in the 80s? We are seeing the US dollar strengthen right now. The Japanese yen strengthened markedly. Japanese people could buy more stuff for less yen. It was very bad for Japanese exporters, for sure, but great for anybody else living on the ground in Japan that is buying things from other countries. But the yen got too strong. Eventually, the yen got too strong. The Bank of Japan said, here's what we're going to do to address that problem. The Bank of Japan lowered interest rates. When you lower interest rates, it makes your dollar less attractive to investors. And when you increase interest rates, it makes your dollar more attractive to investors because it increases how much you're going to pay. So it makes it worth another investor to take on your debt. That's why when you see a country that's in political chaos, they have to pay really high payments on their bonds. A lot of times double digits on a bond. If you're going to borrow money or give us money for us to borrow, we'll pay you back 15%, 10%. But the point is that they lowered interest rates to weaken the yen. And what did that do? You've got a really active economy just coming into its own, getting more active, getting more heated up, really building itself out, becoming significant. And at the same time, they lowered interest rates. What this did is it created a massive bubble in stocks and in real estate, kind of like United States of America today. And how extreme did it get? At the very height of the peak, the small palace in Kyoto, the Imperial Palace, is on a small plot of land, and it was estimated to be worth more than all of the real estate in California. So they inflated this massive bubble. But now what did they do? It's like they just set it up and make clunky, foolish decisions that completely, actually, literally affects a lot of people's lives. Some people lost their life savings. Some people committed suicide. In 1989, the Bank of Japan started to raise interest rates. Sound familiar? Just stop me when it sounds familiar. That represented the peak moment in the value of the stocks in Japan and the real estate in Japan. And just so you know, it still hasn't recovered. To this day, we're talking decades later. With higher interest rates, the economic activity, and it would have done this on its own a little bit because it got to an extreme point, just slowed down. The activity slowed down. And they were facing at that time the same demographic cliff that we are facing today in America. Demographics is about having enough different age groups of people to pay taxes, support the elderly. In Japan, a big problem, they didn't have enough young people to take care of the old people. You want to have a certain portion of people in each phase of their life doing the right thing. When you're younger, you buy a house, maybe you get married, maybe you have kids. Those kids maybe help you out when you're older. All these things happen in demographics, and there's way too much risk here. There's a lot, people think that America is just, everyone's flocking there. I'm going to show you some actual statistics and numbers. The growth rate in America used to be well over 1%. And you can see here in this chart, it's over 2%. 1%, this is per year, and it goes down and it gets lower and lower and lower. As a country, any country develops, the birth rate declines. Developing nations have a lot more kids than well-developed nations. When you get older, you might sell your house or downsize. When you're younger, you might buy 2 houses. This is the importance of demographics. And we are about to face a situation just like Japan did where there was deflation. There's the high likelihood that we're going to be facing deflation. Now, the growth rate of America is 0.38%. And you also think because of the caravans and all these people trying to get into the country that America is actually having a greater population from one day to the next. Fewer people are trying to get to America. The numbers are coming down. We have a double hit here where there's less birth while we're having more death because of the age groups of the population, such as baby boomers. But you'll see now the growth rate is 0.3%, 38%, something like that. And just before we get to Russia and a lot of these other good ones right now, I'm going to jump in and do one thing really quickly. Good afternoon, Peter Leeds. I thought I would take an unwasted minute of my time to tell you that I'm nearly halfway through reading your book, Upthinking, and enjoying it immensely. Best, Andrew. Thank you so much, Andrew. Andrew is my middle name. And you guys need to read Upthinking because it is the most underrated and influential book I've ever or will ever write. Only available through peterleeds.com directly. So let me ask you about Russia. Do you think the sanctions that they've imposed on Russia are having much positive effect? I found the perfect statement that I want to read you word for word because I agree 100% with everything they say in this statement. And if you think back, I remember telling you about how they were driving China and Russia closer together. Now, Russia's just selling a ton of oil to China from a pipeline. They're bringing them closer together. Well, this is from The Guardian, a great publication. I love reading The Guardian. They're a different level than most of the media that you're going to read. A lot of gobbledygook out there. The Guardian, something's worth reading. Western sanctions against Russia are the most ill-conceived and counterproductive policy in recent international history. Military aid to Ukraine is justified, but the economic war is ineffective against the regime in Moscow and devastating for its unintended targets. When you sanction a country, you don't sanction the leaders. What you're doing is you're sanctioning the people. The leaders and dictators will get the food they need. They'll have a nice bed to sleep on. It's the people that get hurt by sanctions. But to go on, devastating for its unintended targets, world energy prices are skyrocketing. Inflation is soaring, supply chains are chaotic, and millions of people are being starved of gas, grain, and fertilizer. Yet Vladimir Putin's barbarity only escalates, as does his hold over his own people. And so there you have it. I mean, you could have your own opinion about what you think is effective, what's working. The sanctions on Moscow, in my opinion, have never been effective, never would be effective, and now you're starting to see that they are not effective. Giving weapons to Ukraine, definitely a thing we have to do. But look, you say, okay, don't buy Russian oil anymore, everybody. Oil's a commodity. Natural gas, a commodity. Anybody can sell it to anybody in the world. If I had a barrel of oil and everybody said, don't buy oil from Pete, I could sell my barrel of oil overseas to whoever I want because it's a barrel of oil. 1 barrel of oil is about 1 barrel of oil. This makes it a commodity. So what did Russia do? They're selling oil to India as well, not just China now. Think about this, okay? They're cutting off Europe, putting more oil into China, into India, the two largest countries in the world. And Russia is giving oil to India at a $30 per barrel discount. And so people will probably think, wow, Russia's really desperate. They're having to give away their oil just to keep their economy going. That's not why they're doing it. Everybody is missing this. Russia is giving a discount to India on the oil to keep them closer, pull them closer, become more of an alliance with them, have more interactions or connections between their economies. Russia wants to make the trifecta with China and India stick against the West. The thing is, India is playing it perfectly because they're not committing to either side, but I don't know what side they're on. $30 less per barrel of oil? Yeah, I'd take that too. India's doing nothing wrong there. There's a tug of war between Russia and China over here, America over here, and India is playing right down the middle, which is brilliant. They're getting discounted oil, but they're not committing to say, I'm with Russia or I'm with America. And they also don't like China very much at all to begin with. I told you guys all about the Kashmir region and all of that. When you get two really powerful countries side by side, you're always going to have a lot of friction there. Here's a quick question that's irrelevant. Which country has the most nuclear weapons? Pakistan or India? Wrong. It's Pakistan. But as I say, oil is a commodity. So everyone, don't buy Russian oil. Okay. Who are they selling it to now? China, Netherlands, Germany, Belarus, Korea, Poland, Italy, Finland, Slovakia. And now India at a major discount to a country that is going to be using so much oil. A lot of oil. Just feeding it right to India. In all those countries, we're talking in the multiple double-digit millions of tons of oil. Let's jump to China. What's going on there? Because they used to have double-digit GDP growth every year. And now it's looking like it's going to drop closer to 4.5% estimate from something that was 8.1% or so not too long ago. They are cooling off fast. Not depressionary, but for China that was growing at double digits GDP to be at 4% now, that's a recessionary move for sure. But what's going on in China? They're having major real estate problems, just like with the Evergrande thing that you know about. Real estate prices are cratering. Real estate activity, sales, building is all dropping fast. They got way over their skis. They got into a massive bubble. And China is the world's second largest economy. In China's economy, 25% of it is real estate. So you say, wouldn't this hurt the world if 25% of the second largest economy took a huge hit? No, because Chinese real estate is incredibly compartmentalized. It's in a vacuum. They could have a complete real estate collapse. It's not going to affect you in Madison, Wisconsin. It's not going to affect you in Detroit, Michigan. It's going to affect people on the ground in China. Add to that, just like in America, we recently had in China a major heat wave. It was devastating, extreme, and it hurt the power grid and it hurt crops, which is not unlike what we're seeing in California as one example of many places in the States right now that are dealing with the same kind of issue. So what's going on in China on the ground? There's homeowners who took all their money, life savings, and invested it in a company to build them a condo that then went bankrupt. Or what's happening now, a lot of people in China have seen what's going on with real estate, all these people losing money. There's people in China who have put down a deposit to help the builder build that condo unit. They could go live in it, but a lot of them are refusing to pay any more. They say, that's it, I'm out, and they walk away. And an unintended consequence that no one's seeing with this stuff is that in China, the local governments get a significant amount of their taxation revenue from real estate sales. Those have slowed right down. So now you know that there's not enough taxation revenue in most local governments in China. And one of the effects of that, among many, is that the quality of life will decline, the effectiveness of the local governments will decline, all happening while all these private developers in China have way too much debt at a time when most countries around the world are starting to increase interest rates. Private developers have about $5 trillion in debt. That's an example of leverage that's maximized, and it's going to come down as this whole Chinese real estate debacle plays out. A lot of these developers have all this debt and they're not even in business anymore. So that debt doesn't actually exist. There's a counterparty that was owed that money that got hit. The end. But I'm going to show you a chart from Statista, and it's got some laughable forecasts on it. You'll notice here, this is the GDP of China. It was at 5.95 in 2019. Then it dropped to 2.24, from almost 6 to 2.24. Then the next year it jumped up to 8.08%. And now it's at 4.37% right now. And it's mostly an estimate. But then you get the estimates from this point going forward. And this is what I laugh at. This is what I take issue with. If you can see the erratic nature of the GDP of China. And I know a lot of this was because of the virus, but that wasn't explaining all of it. It's just laughable. Then they go, okay, we'll take over with an estimate starting here. And then what happens? 5.07, 5.09, 4.97, 4.92%. That's a perfect expectation. If you said, okay, let's just tell them whatever they want to hear, we'll give them the perfect number. We'll say it's good growth and it's under control and it's manageable and it's starting to slow down a little bit. That's what's going on there. Ignore these estimates. The one thing you know is that it won't be going from erratic nature to suddenly a soft sideways trajectory. Manageable, sustainable, it will not. What you do know is that these estimates will prove out to be completely irrelevant and incorrect, whether for better or for worse. They make an estimate because they have to make an estimate because that's what's expected of them and they get paid to do their job, but they know that they can't rely on these estimates. It's just what they calculated. If we said, we'll estimate this, we'll estimate the population, we'll estimate the activity levels, we'll estimate everything, and then they go, okay, and that comes out to 5.07. No, it doesn't. That's just what they think it comes out to. We'll see. I would bet my career and life that the GDP of China will not be 5.07 and then 5.09 and then 4.97%. Like, it's completely, clearly evident that these estimates, it's just them talking out their butt. But I promised you, one really bright economic spot in the world, a lot of opportunities are going to be here available for people who are ahead of the game and educated like you. Nobody's watching this stuff. Some people are watching stuff. Most people that you know are not watching this stuff. India's inflation dropped a little bit, came back up a bit, but it's under control. It's trading mostly sideways. It's about 7% in June, then in July it was 6.7%, August was 7%. And the highest was at 7.79%. That was back in March. Since then, it's dropped, give or take, about 1% so far in a number of months. It'll keep going lower. I think it'll keep going lower in a lot of countries worldwide. But maybe not in India because of the activity of their economy. The IMF has a GDP projection of 7.4% for India. That would make them the fastest growing major economy in the entire world. Their purchasing managers index is growing at the fastest it has in 8 months, which is showing you that manufacturing and supply chains in India are rolling along really well, just as the population is overtaking China as the most populous country in the world. But what I'd say about India, they're in such a significant and unique situation. Not just with sort of being around and getting the benefits of oil being sent to India for $30 less per barrel to try and buy their loyalty, and America trying to bring India back into our fold because they're kind of like wandering out a little bit. But they're in such a powerful situation because they are soon to be the most populous country with the fastest growing economy. Just like China used to be a few decades back, India is going to be the new China. But there won't be a new China. The decisions that India makes, the posturing that they have going forward, is going to lead them to being one of the most powerful, productive, and secure economies in the whole world for many decades going forward. So we're going to be looking into a lot of the opportunities in India. There's even ETFs you can jump on today. This is not trading advice for you. I'm not saying anything about anything. But India I believe, is going to have an incredibly high growth rate. GDP is going to be rocketing. India will step into a new level in terms of development for a country in the next decade. And here's a question for you. Out of Australia, Canada, and South Africa, which of these countries was the first to refuse Russian oil because of the war with Ukraine? Australia, Canada, or South America? Of Australia, Canada, South Africa. It was Canada. And they're also who took Rommel, the desert rat, out of the war by strafing him when he's in a convertible and taking him out of the war. Canadian guy who I met at the high school here in town and talked to him because I knew he was going to be there. In terms of Australia, they are selling way more commodities right now than they have in a long time. They're just pumping it out. Their economy is doing well. They're expecting really good things from their agricultural sector too. And besides all the problems with the real estate in Australia and a lot of other economic questionable situations, they are actually representing or holding up pretty well. GDP grew by 3.6% compared to a year earlier. That's from The Guardian. Now tell me if this part sounds super familiar to you. A yawning trade surplus, this is talking about Australia, but a yawning trade surplus propelled growth even as companies began to cut back on demand and householders drew on savings to keep spending. We don't have a lot of money. We're just putting on credit cards, being given it by the government, taking on more debt, having a cloud of leverage above each and every one of our heads that we won't be able to pay back if interest rates keep increasing. It was a softball for me to tell you that there's going to be a lot of bankruptcies and delinquencies. It's playing out right now. It will get worse. Again, about Australia, today's national accounts reflect an economy which is rebounding from the disruptions of the pandemic, but is still being held back by capacity constraints, skill shortages, and declining real wages. Treasurer Jim Chalmers told the media conference. In Australia, not just like in America, but in the same way in a lot of countries all over the world, Australia is facing really hot inflation. Interest rates are on the rise, and Australia is about to tip into a recession. The property market has softened from the highs of 2021 and is tipped to fall further in the months ahead. Fear and uncertainty is high. And I called out that last sentence there because I'm reminding you what I always tell you about uncertainty. It's a thing that the stock market can handle less, hates more than actual bad news. If you say there might be bad news, but we're not sure, is worse than if you actually just say, here's what the bad news is. Soaring commodity exports and positive agricultural forecasts are expected to balance out the Reserve Bank's moves to counter inflation, which would manifest as an interest rate increase. So they're going to increase interest rates, and they say, but we're selling more commodities, and we're going to have a good agricultural year. We're going to have lots of crops. We're going to sell lots of crops. We're going to eat lots of crops. That, they're saying, will help counteract the effects of the economy being artificially hurt by having increases in interest rates. So they're saying what's good will offset what you're doing that's bad. So we're hoping to break even. Australia's hoping to tread water on a good year when they're selling a ton of commodities. We know we're already in a recession in America. There's a recession right now in Europe. Australia will be in a recession soon. And while there are some bright spots in the economy, such as India, there are still problems across the board with just about everybody else. And every country is dealing with similar problems. So you can watch how it plays out there to see how it's going to play out here. There's inflation. There's increasing interest rates. There's recession. That applies to Europe. That applies to America. It applies to some places in South America. It applies to places across the Middle East, Asia. A lot of nations are suffering what we've done up until this point where we lowered interest rates. And it's the same thing that happened in Japan 40 years ago. We've got low interest rates for a long, long time. We built all these bubbles on stocks and real estate. And now we're going to pop the bubble by raising interest rates because the Federal Reserve tells you that's what's best for you. So most countries are either in right now or about to be in a recession. They're all facing interest rates increasing underneath this huge amount of leverage and debt that we all have in every strata of ways that debt can possibly be had. And a lot of countries are just right now entering a big real estate slowdown, which is going to destroy the wealth effect. It's the biggest asset most people have. So in other words, most people are about to lose the biggest portion of their biggest asset. And you're seeing the rise of far-right extremist political parties all over Europe now, a little bit in America. That's just a demonstration of how unhappy people are with the current economic situation, which is great because they should be, because you guys are getting totally pooched. So consider all of this that I talked about today. And you're making your own decisions, remember, so you decide what you think is right. This is all underneath this umbrella of unbelievable debt that cannot be paid. Much of that debt is actually owed to the weakest among us. They're not going to get as much money as they are promised, as they expect, as they deserve. There will be a major American pension crisis, but there will be other similar issues in other places around the world at the same time. We've basically, as a species of humans, just ran up these huge bubbles, and now they're not believing that bubbles will not just keep on growing or maintain. This bubble's not made out of steel. We've got way too much leverage, and that's one of the things that's going to whittle down a little bit as we go forward. So less money out there buying things like stocks. You've got $50,000 in your brokerage account. Your broker says you can spend $150,000. So you invest the whole $150,000, and it drops $60,000. Now you've got that debt plus a lower asset. So what's next? In my opinion, if you want to hear it, maybe you don't. I believe that we are in for serious deflation in America. You think that's great because the prices are coming down? That's the worst thing. That's the worst thing that's going to happen. If we have deflation, that puts so much pressure and strain on the entire economy, how the government interacts with people to make the economy run, all sorts of problems. As things get cheaper, you're not in a better place. Things cost less because things got worse. Deflation is the worst thing, worse than inflation. It represents a country that is dying on the vine. If we do get deflation, we are going to be in it for the long haul. I'm not talking 1 year, I'm not talking 2 years. It's going to be multiple years. Deflation is a hard problem to fix. It takes a long time. Japan hasn't figured it out. Maybe if they do it, we could just do what they do, and then we'll be out of it quicker than they were. What I'd ask you, though, I'm not asking you anything else in this video. I'd ask you to at least open your mind to the actually negative possibility of a global, worldwide depression or significant deflation in America. You don't even have to believe me. Just open your mind to it for a minute. Just say, okay, let's say, what if it happened? What would you do? What would happen? What would be the results of that? One of the things that I'm expecting is a lot of wars, not hot wars, but resource wars, water, oil, rare earth elements. That's why we're talking about all these rare earth element companies in our Peter Leeds newsletter, because these are the companies that are going to benefit from the way that the world's going with all of these resource wars. There'll be water wars, not war wars, but water right now is being pulled by 4 or 5 different interest groups in all different directions. There's not even close to enough water for all the uses that we need water for. And as always, if you think back a while, I was telling you guys about all the rise of cyber wars, and that's what we're going to see is a ton of cyber wars going on. Meanwhile, keep an eye on the trifecta of Russia, India, and China. If Russia can wrestle India away from America in terms of alliances, can buy them with cheap oil, if they can pull that off, it's going to change the balance of power across the entire earth. And I always like to help you guys and know what to do exactly. And originally this video had 8 things to do about it, because everything I just talked about that you can do today right now that you should do. There is no should, but you should do today, right now. 8 things. And I have it all scripted out. I know what I'm going to say. It's supposed to go at the end of this video. This video I know will be way too long. So it'll be in the next video. That's why you want to subscribe, so that you can see the 8 things that you can do right away, right now, to potentially land on your feet, enrich yourself, help the people that you care about. So make sure to come back for the next video. 8 things to do about all of this chaos.